A busy business can look successful from the outside and still feel confusing on the inside. When the owner cannot clearly see the numbers that matter, busyness does not equal clarity. Sam runs a busy shop, and from the outside, the business looks like it is moving because customers are buying, payments are coming in, products are going out, receipts are printing, and the day is full enough to make the shop feel successful. But when Sam sits down at the end of the month, he cannot clearly tell whether the business is actually healthier than last month because activity alone does not show him what the money is doing, what expenses are rising, what profit is left, how much cash is available, or which payments are still waiting to be collected. The problem is not that Sam has no sales because money is coming in, and that can make the business feel alive. But revenue is only one part of the story. A shop can have sales and still feel tight if expenses are too high, profit is too thin, cash is leaving faster than it arrives, or customers still owe money. Without tracking the right numbers, Sam is left judging the business from mood, busyness, bank notifications, and the dangerous little sentence, "I think we are doing okay." This is the lesson. A business cannot grow from vague feelings. Feelings can tell Sam that the month felt busy, stressful, slow, exciting, or chaotic. But feelings cannot show whether revenue increased, expenses climbed, profit improved, cash stayed healthy, or unpaid payments created pressure. A business needs a few clear numbers because those numbers turn the month from a general impression into information the owner can actually use. Every small business owner should track 5 core numbers. First, revenue. Because Sam needs to know how much money the business earned from sales, services, products, or orders during the month. Second, expenses. Because the business also needs to know what it spent on stock, supplies, rent, software, fees, shipping, marketing, payroll, contractors, or everyday operating costs. Third, profit. Because revenue only shows what came in, while profit shows what is left after the business has paid for the cost of running. Fourth, cash balance. Because the business needs to know how much money is actually available in the account right now, not only how much was earned on paper. Fifth, outstanding payments. Because money that is owed but not yet received can make the business look stronger in records than it feels in the bank. These numbers matter together because one number alone can mislead the owner. If Sam only tracks revenue, he may think the business is growing while expenses quietly eat the result. If he only looks at profit, he may miss a cash shortage caused by late payments or poor timing. If he only checks the bank balance, he may not understand whether the money came from strong sales, delayed bills, unpaid expenses, or a temporary cash bump. The real clarity comes when the numbers are connected, because the owner can see not only what happened, but why it happened. The Plan Track Grow method turns small business tracking into a simple monthly rhythm. First, plan which numbers matter most by choosing revenue, expenses, profit, cash balance, and outstanding payments as the core business health signals. Then track those numbers consistently so each month has a clear record instead of scattered receipts, guesses, and memory. Finally, grow from the pattern by reviewing whether sales are improving, expenses need control, profit is strong enough, cash is healthy, and unpaid payments need faster follow-up. The method gives Sam a way to return to the numbers each month without turning bookkeeping into a monster. The Small Business Bookkeeping Spreadsheet or Sales Tracker Dashboard is designed to help Sam see the numbers that matter without turning the business into a confusing wall of data. The bookkeeping spreadsheet helps track revenue, expenses, profit, cash movement, and payment records, while the sales dashboard helps show what's sold, where money came from, and how the month compares to previous months. Together, these tools help the owner move from, "I think the business is doing fine," to, "I can see what the numbers are showing." Once Sam tracks these 5 numbers, the business picture becomes much easier to read. He can now see revenue, expenses, profit, cash balance, and outstanding payments clearly. He can see that sales came in, but expenses were higher than expected. He can see that profit improved, but cash is tight because some payments are still outstanding. He can see which number needs attention before next month begins, instead of trying to make decisions from a general feeling that the shop was busy. The numbers do not remove every challenge, but they give the challenge a name, a place, and a next action. So if you run a small business, do not only track whether the month felt busy, track revenue, expenses, profit, cash balance, and outstanding payments, then review the pattern before you decide what needs to change. A business grows better when the owner can see the numbers that matter. Follow Plan, Track, Grow for simple bookkeeping spreadsheets, sales dashboards, and business tracking tools that help small business owners plan what matters, track what is real, and grow from what the numbers teach.